Expecting an IRS tax refund and instead you get a bunch of letters in the mail from the IRS? It is highly likely that you got selected for an IRS tax audit. And here's exactly what you need to do to respond back to the IRS so you can beat them. The one thing that you have to keep in mind is that you must respond back in writing. A phone call may not help. You might get conflicting information by depending who answers the call at the IRS. You gotta make sure that your response, your packet is nicely, neatly organized, that makes sense. That way whoever's reviewing it, their job could be 85% done and you get the approval and you maximize all of your tax credit that you claimed on your original tax filings. And if you don't respond back or you don't qualify for the credits, the IRS reverses the credits and instead they correct the tax bill, issue out the tax, interest, and penalties if it's not paid within the due date. Going through an IRS audit sucks. And sometimes the tax return automatically gets flagged down for the earned income tax credit. And these credits come along with just claiming certain children and dependents and your income level that the IRS wants to say, prove it up. Why? Because historically, this has been one of the biggest fraudulent claims that the IRS has encountered with people not claiming who they're supposed to claim on their taxes. So here's exactly what you need to prove up to make sure you claim all the credits regarding the children. The first is the relationship and ages of your children. Next on up is your income, followed up by your US citizen status. And lastly is the US residency and presence within the United States. In addition, what this audit may prove up is whether or not that you did qualify for the head of household filing status. So you might need a couple other requirements. And keep in mind, the same proof for certain items might prove up a couple of these different things. So let's begin with the relationship between you and your dependents. The birth certificate could prove up both. Like if you're the father of the children and their age, the birth certificate alone proves them both. And sometimes you may need to connect different birth certificates to prove a relationship of nieces, nephews, grandkids, so on and so forth. Next on up is your income. If you have W-2 wages, it must meet the threshold of the earned income credit. You may also qualify through net self-employment income. However, the net self-employment income has been one of the biggest red flags with earned income tax credit. And if you had self-employed income and claiming the earned income credit, you may have to prove up the legitimacy of your business. The net self-employment income has to be proven up by gross receipts, business expenses, and many other aspects regarding running a business. What type of accounting system did you operate? Do you have business cards, a business website? And you may use other circumstantial evidence to prove up the legitimacy of your business. Next on the list is that you must be a US citizen yourself or a US resident alien all year long. If you're going through the immigration process and became a US resident alien throughout the year, then you are disqualified from claiming EITC for that particular year. In the following year, you have the green light to do so. And next level up is that you must have resided in the United States for more than half the year. This is for both you and your dependents. In order to prove residency, you may use circumstantial evidence that ties you to a US address for more than half the year. This may include a combination of mortgage payments, banking records, rent payments, utility bills, and any other evidence that you may gather to prove that you were in the United States for more than half the year. One of the most difficult part about going through this procedure is that the IRS is notoriously horrendous and horrible as far as responding to whenever you do submit items. And instead, a lot of people find themselves with getting a tax bill at the end of this whole procedure. And that is because the IRS disallowed the credits. They reversed the head of household filing status to single. And it's almost as if you never responded to any of the inquiry to the IRS. And the biggest mistake I see that people make is that people only call the IRS and that they're hoping that the IRS agent on the other line applies the changes. And that is because the IRS agents, they have no authority to apply the changes. They instead have to review the packet that you submit. What I highly recommend is to get yourself familiar with the audit process and procedures. And in addition to that, get yourself familiar with the appeal process when there's a disagreement between you and the IRS. And the appeal process includes a combination of either having a manager's conference, a written request on a 30-day letter, or when you have to petition the tax court on a notice of deficiency with the IRS. And if you happen to not respond on time, there is even an audit reconsideration you could do afterwards. If you found value, hit the like button and subscribe to my channel. I got more tax relief solutions for you. If you're going through an EIC audit or have gone through an EIC audit with the IRS and you need some help, comment EIC help below and I will reach out and we could set up a free case review.